What now, what next? The week before is gone, the week ahead is yet to unfold. Pete, talk me through it.
Good morning, Will. I think we've had a lot of moves over the last week, really crystallised the market. We had those non-farm payrolls, better than expected, up 300,000 positions. So we're at 1.76 million. The market was anticipating about 1.4 million. So you've had a very, very strong move to the downside as far as that unemployment number. And that's a key barometer as far as US economic health.
Talking about US economic health there, it's not the only number in town. Virus numbers are up.
20% up in 2 weeks, from 4 million to 5 million. So that's quite, when that works through, and we're still saying it's 10 to 1 as far as those numbers. So it's an extra 10 or 15 million people in the US that actually would have contracted coronavirus. Now, what happens as far as retail sales, what happens as far as consumption patterns and so on, those numbers are growing. Seems to be still many different interpretations of whether you should be on a mask, whether you shouldn't have a mask, all of those, idiosyncrasies that people work through.
Real sentiment issues. So if we're talking about the dollar eyeing, the US stimulus talks, retail sales, UK GDP and the RBNZ, just for focusing on today, I mean, Reserve Bank of New Zealand, let's take a look at this chart.
Yep. I mean, as you can see there, we've just had such a strong move as far as that interest rate. Where you're looking there, very, very strong move all the way through to around about nearly $30 billion as far as holdings of government securities, and there you've got your cash rate. So it's...
We're talking negative rates here specifically, though. We're talking about, it's not a less is more policy.
No, it's not, and that's where New Zealand plays at the moment. They're conscious as far as that strong New Zealand dollar. They don't need it to be at that sort of number as far as 67 handle. They're looking for softness, and that in turn could be a work through with the RBNZ and what their frameworks are and how they develop policy and how that's interpreted from the market.
Interestingly, I think there's a New Zealand election coming down the pipe. There's also the US election that's only probably 80 odd days away now.
Yes.
Would you say that they're similarly setting up to leverage what is there today, the crisis today, simply as a future policy for tomorrow?
Well, when you look at Jacinda Ardern, she has, and they're reporting no new cases as far as COVID, I think for the last 100 days I saw, which is a wonderful number, and they're really the benchmark of most countries in the world. Where you look at the states, they're 54,000 a day. So, it's catastrophic as far as deaths, what's going on, across the whole blanket of the United States. Now, I don't think Ardern's got a lot of, there's a lot of momentum for her to be re-elected. She's done a lot of things right, not many wrong, whereas Trump is a very interesting figure in his own right. Are they going to re-elect him? Is Biden going to be the man forward? And how does that all play? Where are we sitting in 2 months' time, let alone 3 months, with the coronavirus? They just seem to be galloping ahead, those numbers.
Speaking of galloping ahead, Victoria, and we're in New Zealand here, crossing back to the Tasman in Victoria, we've got probably a hard reality and a big wake-up call for local Australian jobs.
Absolutely. You look at that chart there, and that really is the reality of the whole matter. Unemployment numbers are just going through the roof. And do people get re-employed, and how quickly is that turnaround? So there's the numbers. That's the reality. And where you've got that employment change, that creates a sense of fear across small to medium-sized enterprises. How does Christmas look? What happens to the Victorian economy? And is that embraced across all of Australia?
Headlines in sort of talking about the Victorian economy, you're reading like, they were framing up Victoria as the heartbeat of Australian business. I mean, where do we see this over the next 6 to 8 months?
I don't know. No one's got a crystal ball where we see it over the next 6 months. I think it's going to be, in some ways, if they don't contain this, is Victoria the first cab off the rank? I know the numbers are starting to drive up again in New South Wales, certainly in Sydney, so they've got to be contained. And no, this is uncharted. No one knows where this can actually go and what the economic carnage is to the domestic economy here. Prime Minister Morrison certainly has his hands on the wheel, and it's going to be a bumpy ride over the next matter of 6 to 12 months.
Crossing back to, we spoke a bit about UK data last week, Pete. What's changed in the last 7 days?
Well, when you see, you're looking at GDP, industrial production and manufacturing output off that graph, you can see that's been a very, very solid move over May and June, positive uptick, month-on-month change. Is that going to be maintained, or is that we're going to build from that leading into July and August? Now, that's the unknown. Those numbers in the UK are growing daily as far as coronavirus across, so is Germany, France and Spain. So it's not as though they've put this matter to bed. Is this just a little bit of a hiccup, and do we go back to these numbers that we saw in March and tragically in April? So again, it's an unknown. What happens? I know that Boris Johnson's again with his hands firmly on the wheel, but it's uncharted, and that's the uncertainty facing, I think, the third quarter and certainly the fourth quarter.
This said, the Bank of England was somewhat upbeat, in terms of the way it was talking about the situation at its August policy meeting.
Yes. Well, they were upbeat in the sense where they're looking at that growth and the production and GDP numbers were stronger. So I think that you can only look in the past to tell you a little bit about where you are at the present. You really can't, under these circumstances, you can't say, well, this is what we did last month, so naturally we'll build on those for next month. Well, I'm not sure whether that's the case. And that creates that volatility and uncertainty, and I think the retail traders are only in for short periods of time. They just see opportunity in the market, both going long or short, and I think that's the makeup of where we are at the present.
And we're seeing growth numbers here in Australia. Certainly Victoria's led the way there in recent times. New South Wales popping back up. Going to Europe, if we're looking at, are we seeing something similar happening in Europe? Are we seeing a second wave come through?
Absolutely. Some of those numbers are, the best part of over 1,000 a day in the second wave coming along. So July numbers, look at Spain. I mean, that tail end of April leading into May, June and early July, you would have thought, well, it's under control, and now they are spiking back up. Belgium, it's starting to tick back up in similar fashion. Nothing like we saw that huge peak or spike in April, mid-April, but it's certainly building. Higher numbers now than they were in May.
Germany seems to have a good handle certainly on its footprint there at the moment.
Yes, it does, and it doesn't seem to be as dramatic as some of those other markets like France or Belgium. France is a bit of a worry, but yes, the German market seems to be a little bit more contained, but they're still certainly not favourable, still hitting that 1,000 number each day. And what happens as far as European summer, we all understand that's a sense of being out and about. They've been long cold winters, and they enjoy their sunshine, enjoy parklands, and they're a real outdoor sort of person. It come certainly July and very much into August. So let's just see how the numbers roll forward for the second and third and fourth week of August, and what impact that has naturally to GDP and then consumption.
Talk about the euro for a minute. I mean, I think that's been tracking pretty well, given some of the I guess the last couple of weeks' activity.
Sure. 2-year highs.
So we're sitting up there. Gold came off a little bit. Euro's up. So in terms of currencies, Pete, as you cast around the market,
I think to the latter part of last week, it was looking fairly solid push down for that US dollar. It's bounced and it's up about 1%. So gold came off 2% on Friday night. I think the fear factor, what's going on as far as Trump's from a geopolitical standpoint, he seems to be very much China virus. He terms it China virus, and so does his front row, Pompeo, and I believe that even Mnuchin's starting to say it as well. So what does that say from an interpretation to the market? The second part is, does that momentum of that US dollar track north over the next week? Building on those non-farm payroll numbers, we understand what's happening as far as the US WeChat and TikTok.
Well, this is a big point, because there's a big war looming now in technology.
Yes.
Who can play, who can't play, who owns it, who doesn't.
Yes.
What do we do about supply chains into those markets? What do those big organisations do when they have to gut their product? They can no longer actually,
Well, I think the WeChat numbers are about 1 billion consumers. So how does that play? No one's really sure. No one's written this textbook before. So we've got 45 days until it's introduced. And then you're looking at, as far as the US wanting to see audited figures from a number of those big companies on US stock markets, or stock exchanges, I should say. So they're going to be fully audited. They're not currently, and that means it's disclosure, and that's going to create, I think, headaches all round, and of course the uncertainty factor. So yeah, we've got a very, very interesting third quarter, and then how that plays into fourth quarter could be very, very, I'd say volatile to say the least.